Well, hey, folks, thanks for joining me today. Hopefully, we have realtors and loan officers on here. Let me know how your year went. Let me know down there. Give me a thumbs up if you had a good year. What we want to do today is I want to help you strategize for 2026. So, if you're a realtor out there, you might have a client come in and say, okay, why should I sell? What should do this? Give them some guidance in your market. And hopefully, you know your market pretty darn well. But maybe we can help you out with our community. And I'm going to give me a thumbs up if you guys want to join this and create this thing on Thursdays. And basically, it's realtors and loan officers just helping us learn some of the things that realtors might have that it might influence us in kind of the same way. So it might help us intermingle and get to know each other. But let's go off and let's talk to realtors out there and loan officers. We want to help guide our clients, not like those people on YouTube. The world's going to end and all that. We don't want to do that. Okay, so I just want to go back and say, why do I do this? And somebody asked me the other day, I have over 5,000 videos on here. And the people ask me all the time, they're like, why do you only have you don't even have 40,000 subscribers? I'm like, I don't know. Hopefully people understand or just want to learn something about real estate. But check out some of my videos. And this goes back 2-3 years ago when I was saying, okay, folks, there isn't going to be, a banking collapse back when there was a banking collapse a couple years ago. And no, we're not going to go into a recession, and no, we're not going to, the housing market isn't going to crash 40% or more up through here. You're going to see the grand poobah here in a second. Where'd he go? It was Nick, and this is kind of why I started some of these channels. I don't mean to give you, but check out my channel. Okay, so somebody asked me, Dan, why do you do this, folks? And I thought about it. I'm like, I just want to make a difference. I just want to make a difference. I've done this 35 years. Okay, I have a good clientele. I have a great staff. We do a good amount of business. So I'm like, okay, let me go out there and help people. And we've been trying to call on realtors. If you're a loan officer, you probably do the same thing. And realtors, you probably have a loan officer. Maybe you think you know everything about the mortgage business, but you might be a little shocked. So what I wanted to start doing on Thursdays is, if you guys want to join me, put all our heads together and figure out what's our strategy for 2026. I'm going to give you my feedback and why. I've been pretty consistent over the last 3-4 years. Again, that's why I brought this up. Look in and do your due diligence on me, please. Don't go back and, I didn't erase videos I did a year ago or 2 years ago to kind of trick you. I've been pretty consistent with this, and here's the patterns I use, and here's what I do to help my clients. So what we're going to go over today is the questions that we're going to be asked. Okay, so the first question we're going to be asked is, okay, what's going to happen with rates? Okay, that's the biggest question I get every day. And then the second thing we're going to talk about, and I hate talking about this, is home prices. And I've been adamant about home prices over the last few years. And folks, I lived through the bubble, the tech bubble. I've lived through the 2008 housing crash, and I know exactly why it happened. And a lot of people just don't. And I study economics. It's kind of my passion. I'm kind of a geek when it comes to that. But let's get over to what we want to focus in on. And I'll give you some tools, especially if you're a loan officer or realtor. I'm going to give you all my tricks behind the scenes. I don't duplicate this. There's enough clients out there for all of us. So hopefully, even if you're a loan officer or you're a team lead, you can give this, view this. And we're coming up with some tools for you guys out there, especially loan officers, to give you calculators, the tools that you need. I don't want you to spend $150 a month on these, tracking the rates and stuff like that. And then you give you 100 tools you don't even use. We're going to try to give you some tools that you can truly use on a daily basis. But let's get over to this. Okay, so first off, what we have to understand as realtors and loan officers, when we're talking interest rates with our clients, you have to understand what's in their mind. What are they thinking when they're checking rates? Because if you go through this, I created a short just like 2-3 days ago by accident. I'll try to post it up here down below in the description. And I went through and I said, okay, I'm just going to be a homeowner. And I Googled mortgage rates. And I clicked this one button, and it was like, what's the best rates for first-time home buyers? I think it was on Yahoo. And it came up, and I scrolled down through, and it had this little caption for first-time home buyers, and then there starts all the ads from 5, 6, 7 different mortgage company banks. Half of them I didn't even hear of. Then there's another caption, best rates for first-time home buyers. And then there was a laundry list of 30 different companies. How do we separate ourselves from that? Even if you're a realtor, what's having someone sign with you versus somebody else? So let's look at rates. Even you realtors have to understand this. The rates are comprised, there is no 30-year magic fixed rate. Rates are comprised of a whole bunch of things, but the biggest components of this is your credit score. And most people don't understand their credit scores. So do videos and help your clients understand credit scores because they think, okay, I have one credit score. No, you have 30 something credit scores. If you don't know that, folks, even if you're a realtor or loan officer, check out some of my other videos because I explained to you guys there's TransUnion, Experian, Vantage Credit, FICO scores, all that stuff. So this is how you kind of break out from the pack. You can understand, how these work. So here's how mortgage rates work. If you look over here, you're seeing Mortgage News Daily. Their rate today, and I just published these rates right now, so I'll try to show these, is 6.24. Now, I love Mortgage News Daily. Love them. I've been a subscriber of theirs for years. I think we have even a subscription thing down there. You can link it over to them. Freddie Mac's coming out, though, today, and they have a rate at 6.19. And then we have bank rate, which everybody just Googles at. It has 6.25. I don't even think bank rate's a bank. Let me know if they are down below. So your borrower's looking at this and saying, well, shit, I'll just call Freddie Mac or Freddie Weekly Average. Well, what's that rate consist of? You don't know. You need to know as a loan officer. You need to know as a realtor. Okay, because your client's going to say, well, why am I not getting that rate? Your preferred lender is telling me I'm at 6.5. Why? So this is why every day I come in and say, here's what's going on with rates and the whys behind it. You need to understand all these things. Okay, so the next piece is how much they're putting down. Are they putting down zero? You're using USDA or VA. Cool, we offer those programs. Just check out my channel and I'll promote that in just a little bit. But what are you putting down? Are you putting down 3%? Even if you're buying a home, this is your second or third home, most people can qualify with 3% down. Are you putting 5 or 10? The least amount of money you put down, the less, most likely you're going to have a higher rate. Think of it as you're lending your friend money and they want a lot of money. You want some collateral, but if they're going to pay you back in increments and you maybe don't know if they're going to pay you back, you're going to probably want to earn interest. That's basically why the banks earn interest. We'll get to that in another section. But so these are the components. What kind of home is it? Is it a condo? Is it a single family home? Is it an investment property? That's not the rates. Mortgage News Daily, right up through that, I can tell you exactly how that rate's constructed. They survey lenders all over the place. They don't have a rate. So they survey lenders all over the country, and those lenders respond back. And they respond back to this. These people have a 780 credit score, 780. They're putting down 25%. And most of the time, if you read that, there are some maybe underwriting fees or something like that built into that. So is that you? Is that your client? Probably not. If you're a realtor, how many of your clients are putting down 25%? Unless they're buying a mansion that's their fifth home or an investment property. Loan officers, you guys get what I'm saying. Okay, so you have to understand when your client's looking at these things, we don't know what they're looking at. They're just looking, okay, what's the rates? And check it out. Just Google after the show. Just Google best mortgage rates or do this. The rate update. You can come up with me, but no, just Google it and check out every one of them. They're just ads. Okay, they're just ads. So we'll stop there. Now you understand a little bit more on how that works. Now let's get over. Here's what I'd suggest you do. Advise your clients, and if you're a realtor or a loan officer, what they should be doing. Okay, so if we're in really volatile times like we kind of are now, and here's my analogy of this thing. And I use gasoline all the time. I hate when I do this. I'll be driving. I was driving to work one day, and I'm not kidding you. Gas prices from the time I went and the time I came back went up like 35 cents. I'm like, that's nuts. So, this is why we need to protect our clients, because if it's a hugely volatile market, you might want to lock in. You might want to float. You might want. So my suggestion is, here's what I did. I created this through AI, and I just put in all my parameters and just start training your AI. And I go in now and I say, okay, based on all these parameters, here's the way I'm viewing this. But what do you take? What's your take on this? And most of the time it agrees with me because we're running the same analysis. Folks, I'm just a data machine. I'm not making this stuff up. So right now, this is what I'm suggesting to my clients. Lock in, float, or float. If you're not closing within 30 days, just float. We're going to have a whole new Fed and so forth down the road. But these are things you have to have your clients understand. So make sure you understand, should you be locking, should you be floating? Now here's where people get completely confused. And hopefully you're a loan officer here and a realtor watching to say, okay, I want to know this stuff. So when my clients ask me a question, don't just regurgitate the same crap you hear on TV, because 90% of the time they're wrong. And I go to YouTube and look at how many people said the housing market is going to crash so bad. You have analysts, you have the last 3 years, then 4 years. Now it's going, I don't even look at it anymore, because I'm like, then one person was saying, well, it takes 4 years for the cycle to roll over. No, it doesn't. So this is the bullshit that we keep getting, hit on a daily basis. So learn the facts and then be able to back them up. So here's the bond market that really creates mortgage rates. Okay, I'm not trying to make this an economics 101 channel, but if you're on this video, you want to or need to know how mortgage rates really work. Okay, so this is the bond market. This is a mortgage bond. It's called the MBS, mortgage bond backed security. There's different security codes you can watch here, different securities. But just go in here and click the 5.5. It'll always usually give you, where you should be at the time. Okay, so that's what you're looking at. This is the bond price. Here's what I want you guys to understand. Here's what rates have been over the last year. Okay, so this is the bond market. All you have to do is look through here. Look at where the price was, 100.22. Where are we at today? 101.15. That's really not a move at all. That might be an eighth or a quarter in rates over the whole year. But we've had huge ups and downs, and the people try to time the markets. So that's why I created, and you guys might want to do the same thing. Go to my website. Shit, I didn't even pull it up here. Go to our website, and here it is. RateWatch 2.0. So if you're a homeowner on here, thanks for being on here. But here's what we do. We want to know what interest rate you have, because a lot of people just don't understand. I'm going to get the fees and costs and things like that. So when you're talking to your clients as well, you kind of get it as well there too. But a lot of times when you're buying the house you bought, if you're a homeowner, the fees are expensive. I mean, in Illinois, I keep saying it, if I bought my house here in Illinois, the title fees at the cost now, $7,000-8,000. If I was buying it, if I was refinancing, it's like $1,000. That's $6,000 less. So take the cost out of the equation just for the time being. If you put in your interest rate right up through here, or put in your mortgage information, let me know what interest rate you want to be contacted when they hit there, and we'll reach out to you and let you know what the payment would be. So if you're a loan officer, look at doing the same thing. Hopefully you're going back and calling your old clients back. Okay. And then what you might want to do too is, I do this, and I'm not trying to rip you guys off, but there's companies out there, I hope you guys know who they are, they're ripping people off, especially veterans. That's the one that really pisses me off. And I did a few videos, and I even gave a shout out to Jennifer Beniston, or I think that Betston out in California. She's like the VA queen on YouTube. And but what I want to do is, make sure everybody's in check. So if you're a homeowner right now, or home buyer, and you're watching, you're like, okay, can you review my loan estimate, my fees and my rate? Yeah, right through here. Just click it and upload your loan estimate. It's that simple. So what we do is I then use a system called BombBomb. Okay, I do a video and I basically explain to the clients, here's what we can do versus here's what you're getting offered. And I just show them a comparison. And I always ask them, if I'm beating them on the rate and the fees, please use us. But I'm not trying to, if you were saving them $300, $400, $500, I'm not stealing your business. It's those ones, where, they're giving them a rate at 7.99 with 3 points, and you can get them 6.25 with no points. Those are the ones we're trying to keep in check. So that's what we do. So these are some of the things that we do. I was on News Nation and NBC News and stuff like that recently. It's kind of cool. My whole team's, there's 5 of us, folks. We're not a huge corporation. If you're a loan officer, that's why we would love for you to just, watch us, subscribe down below. We're trying to build out more of an educational channel to help everybody, even realtors out there. But there's a portable mortgage. You need to know about it. Is it going to come to fruition? It might. This one actually might. The 50-year, no way it's going to go. There was another one that they proposed. You could take it with you or something like that. I don't think they'd have to change everything in regards to that. So that would be really difficult, but the portable mortgage might just work. So give them the tools that they need. So now let's get over. We understand maybe the bond market a little bit. What affects the bond market? That's what you need to know, because a lot of the smoke and mirrors that we get every day, it's just smoke and mirrors. Here's mortgage rates for the whole year. Again, if you just go from here to here, that's not a very big move at all. But down here to here, that's a big move. So if you had a client that closed down through here, you should be calling them. If you had a client that you're a realtor, call them up and say, hey, I know you closed back in, May. Did you ever reach out to your loan officer and just, make sure you don't, just let's work together. That's now your client is saying, you just call me and making sure I got the right mortgage. That's freaking cool. So, that's how we can all work together. And we're trying to create an atmosphere here where we can work with you. Okay, so now let's get over to what affects these things. Okay, the biggest thing right now is the Federal Reserve. Okay, so people are going to ask you, what's the Federal Reserve going to do? You should know, but don't just, they're going to cut rates. Well, if they said, why? Oh, because they gotta. I'd hang up on you. Okay, so here's what you need to know. What does the Federal Reserve, who are they first? And why does anybody really care about them? Because they control an interest rate that nobody really cares about. Okay, so the Federal Reserve was created, here, let me pull this up. The Federal Reserve was created, I think, 1932 or something like that. And don't fact check me on that because that's a guess. But here's what they were created for: two things. To basically keep prices in check, which is called inflation. And then the other thing was to keep employment at full employment. Now, how they do all this stuff, it's pretty intriguing, but there's the unemployment rate. So these are the things that they monitor. This is what you hear every day in the news, all the inflation and this and that. Do you really know what it is? Okay, so let me just give you some tidbits. How a lot of times I can be pretty darn accurate with my quotes is I follow what's the components in these things. So let me give you some secrets. Okay, so the inflation numbers, which you have to focus in on is two things in this area. What's our national debt? Okay, and then two big things. What's changing the atmosphere of all of our national debt? Here, let me bring it this way. What could really help right now is energy, to bring down prices everywhere. So we have oil prices that were 2 years ago, I think, at $95 a barrel. And today they're at 58. What's that? A 50% drop, 60 cents. I don't know what it is. That's huge. So you have that, but then you also have something that came out the other day. And if you watch my videos every day, it was the rent equivalent housing cost thing. It's been flat since 2022. We've been saying, okay, that the number that the Fed's using, I looked it up the other day, is like 5.3. So if you have a 5.3 percentage that you're using as a number, bear with me here, I'm getting somewhere, that is truly zero. And it makes up, here's the catch, it makes up 40% of the inflation number. You'd be like, okay, that would have a big adjustment to it. So that's one big piece that's going to take out. Now, here's what you're saying, or here's what they're going to say. Well, this tariff stuff's going to kill us. Well, maybe. So let's look at it this way, and I have a tough time explaining this. Let's say you had prices increase 20% today. Okay, they went up 20%. It's like, holy shit, everything went up 20%. But they stayed there from January of 2025 all the way to January or February of 2026. So then what would be the inflation, the 1-year inflation number at that point? It'd be zero, because the 20% came in January. Then when we took a January, the effect all the way to the following year plus 1 month, your inflation rate is zero. I hope you get that. So that's why when you start seeing these numbers, when tariffs, they pop things and they're going to gradually move into the system. But then you have energy and also, what was I just talking about? Energy and the other thing that was coming down. Okay, so those are the things that you watch for the inflation numbers. Okay, so that's what we have when you start looking at these. So let me give you my projections with this. And please, join me in the chat, folks. I'm not here just to talk the whole time. It would be nice to conversation with somebody out there. Okay, so these are the components. This is what the Federal Reserve watches. What's inflation going to do? I just told you. I don't really think it's going to do much of anything. If anything, I think I'm going to surprise the market and say inflation is going to come down, might come down right into track where the federal funds wants it, or the Federal Reserve wants it, or more. And then we look at the jobs report. That is a complete question mark, because this week we had ADP come out with, saying there's people just losing their jobs every week and nobody picking back up. And then on the other side, we have the jobs report today from the government saying that the jobs numbers look pretty good. And then we have a Challenger report saying there was 1.1 million people who lost their jobs. So where's the jobs numbers? That's what the Federal Reserve is going to focus in on. So now you're going to say, okay, Mr. and Mrs. Consumer, I know you think that rates are going to go down in the future, or here's what we're going to say. Yeah, they're most likely going to go down in the future. But even though we know a lot of these things are going to go down, where are mortgage rates going to go? Okay. And that's where mortgage rates really get tied into the treasuries and other bonds. I'm not going to help you go into all that discussion with you. I just want you to understand what the Federal Reserve does, monitors, and so forth. Okay. So here's another tool that you can use. The Federal Reserve, they come out 4 times a year, and they put a dot next to where they think the federal funds rate will be at the end of the year. Okay, so they just did this, I think it was 2 months ago. They do it 4 times a year. So at that meeting, if you look at this, they were saying that the federal funds rate would be at 3.5 to 3.75. There's always a spread there. Well, right now we're at 3.75 to 4. So there's most likely 100% chance that they're going to cut at this meeting. But this changed throughout the last Fed rate cut and then where it is today. So the Fed's going to cut rates from where we're going from here. So yes, that's going to happen. The long-term outlook on rates, don't think they're really going to move. My projection for Q1 of 2024 is this. I don't really think any of this is going to be inflationary. I don't think we're going to have a massive loss in jobs. And this is where I'm counter the markets. And this is why, I don't know. If you're watching a crash and doom video, you get 100,000 views, but I'm just trying to really educate people. And that's where I really need your help out there. So spread the word, help share this with realtors and other coworkers that you have. But so here's the federal funds rate. That's where there's expected, after news that came out in the last 2 weeks, the Federal Reserve is going to cut rates, but then your clients are going to do this. They're going to say, okay, they cut rates. That means mortgage rates are going to go down, right? No, it doesn't. Okay, so that's what you really have to educate your clients on. And this is where all the other data comes into effect. Where's inflation going to go? It's really going to go nowhere. Where's the job market going to go? It's really going to go nowhere. Tariffs, that's still an uncertainty. Where's the national deficit going to go? All this is still kind of cloudy. So things aren't really going to move much one way or another. And people don't like that. A stagnant market isn't sexy. So now let's get over to the prices of homes, because I want to have some people contribute here. So if you're here and you're a realtor, if you can give me like a house emoji. If you're a loan officer, just give me a dollar sign if you guys don't mind. Let me know where you're coming from too, if you don't mind down there. So honestly, here's the biggest reason I started doing a lot more videos is the housing crash stuff. The people were coming in even 2 years ago, and they're like, the market's going to crash somewhere. I'm like, and these people are on CNBC and they're all over the map, and they're just saying, well, they got to crash. The prices are too high. It doesn't mean they have to crash. Okay. So if you look back at houses, what my house was worth 20, 30 years ago, it sure as hell was a lot less than it is today. So that house prices go up. Where you're really getting tanked right now is taxes. And I'm going to go to that in a second. So the real reason why I really started coming out with a lot of details is I just wanted to get kind of debunk a lot of the bullshit out there. So that's the nitty gritty behind that. Let's get over to the real estate. What has happened since people have been telling us that the market's going to crash, just completely crash after that huge run up in 2021? So we had a 2021, houses went up in some areas 20%, 30%, 40%, Austin, Florida, and then it was like, okay, those markets are going to get hammered. Yeah, they'll have some pullback. But here's what happened over the last 3-4 years. Hopefully you weren't one of the ones watching the Nick guy and the real estate mindset thing and the other realtors that come in every day and it's going to crash. These are realtors. So those are the realtors I don't want you to be. Okay. So here's what happened. You have to know this, and you have to know your markets, because you can't have people saying, okay, Austin's down 50%. The market is bad. My market's great. So here's what happened to the national numbers. And we'll get to the local numbers. Again, you need to know these things. 2021, House prices would have been up 20% or more. Okay, it's just how it was. 2022, nothing. Federal Reserve spike rates, 2022, 2023, rates went to 8%. What happened in the market? Everybody was saying the market's going to crash. And I kept saying, no, it's not going to crash. Just nobody's going to sell their homes. What's happened from 2022 to end of 2025? I've nailed it. So hopefully you can start doing this. This is why I'm trying to show you guys the things that I'm using. So 2023, what happened? Most markets were nothing, but some markets were up 2, 3, 4%. Okay, 2024, same thing. I think the average market was up 2, 3%. Okay, so now you're saying, okay, Austin was down, Cape Coral was down. Well, if it was down 5%, it means something else was up 17%. So that's just what it shows. Okay, so let's just go over to here. What areas are good? What's areas bad? These are what I'm going to go over my forecast when I create my forecast. And you guys could create one too. Just go through and really understand each one of these markets. But if you're a realtor on here and you're in any of these markets, let me know what your thoughts are. Just give me West and thumbs up or whatever you want to give me. But the Northeast, they're doing good. I can vouch for it. Our business right now is coming in right through here. Midwest and Northeast, right through here, we are getting a lot of business still from Texas. Believe it or not, Texas. California slowed down a little bit. So here's where the top markets are right now. And this is research done. I just Google searched it, ran it through a couple of AIs just to validate the information. Rochester, New York, Omaha, Nebraska, Dallas, Texas. I got a builder in Dallas, Texas that we're going to have on. He builds some of the most awesome homes. I want to have him on here because he's just an independent guy and just a cool dude. And once I saw the houses that he built, I was like, I want one of those, but I can't move there. Madison, Wisconsin, not too far from me, and Philadelphia, Pennsylvania. These are the areas that's supposed to do pretty well. Down through here, the markets that aren't going to do too well. Cape Coral, Florida, Austin, Round Lake Beach, or Round Rock, Texas, North Port, Sarasota, Florida, Tampa, Florida. You can see right through here. Florida, most of the South and the areas that some of these areas got really pounded by that hurricane. Austin, which had a huge run up, and Denver had a huge run up. So you can cherry pick these and say, hey, the market's crashing, but the facts are the facts. They're, if the national average is up even 1%, the ones that are crashing are being offset by something else. Okay, so that's that piece of it. When you're this is a piece for you realtors out there. When you guys are showing homes, especially if you're in Cook County, Illinois, these are where our taxes are going, folks. These are where our taxes are going. Look at the most, I don't even know how to say this, probably the most underserved areas in the Chicagoland area. And if you're here from the Chicagoland area, vouch for me, is Dixmoor and Phoenix. Who are the most people devastated by their real estate taxes going up? Probably people in Dixmoor and Phoenix. How much has their real estate tax changed? Up 100%. 100%. So these are the areas when people are starting, they're coming in saying these houses, they have to come down in price. Please, as loan officers, realtors, please advise your clients. We need to know this. I don't know if you guys saw recently, there was an article on D.R. Horton. What they were doing is their loan company, hopefully they weren't doing this. They're under suit, and I don't know what that's going for right now. I just said that what the allegations are. What they were doing is they were coming in, and when they were qualifying their clients and everything, they were actually giving them wrong real estate tax information. And let me explain it to you. And this is great news for you realtors and loan officers. Sorry to keep you repeating that, but these are really important because I just had one the other day. We can't do the loan now because real estate taxes went up so too high. We've done debt ratio. I'm being honest. So when you're out there looking, please, as even realtors, please be the upfront person for us. Look at the real estate taxes, dig into it. Does it just seem, oddly low? Don't think, oh, this is a needle in the haystack. It's not. They might have an exemption they might be elderly, meaning senior citizens. I'm right there. They might be a veteran that's disabled. These are the things that people need to know. But what D.R. Horton was doing is they were qualifying their clients with the real estate tax bill on the vacant land. So then they qualified easily. Sometimes we couldn't even get them to qualify, but we did, or they did. And then what happened is once they closed on the loan, about a year later, people start getting their mortgage statements and they're like, wait a second, my mortgage payment just went up $500 a month, and that was probably an average. Like, what am I going to do? What happened was when the house got reassessed, now that the house is built on there, the house, the real estate value was 10 grand. Now the house is built, it's 500 grand. Um, Now the real estate tax is quadrupled or more, and that's what happens. So make sure when we don't want a client. I don't want a client that's a year from now. I don't want to close on somebody and say, hey, I made commission, but then a year from now they can't afford that payment. That's on me. That's on you, the realtor, too. So let's not kick the can around on this thing. So I'm not pointing the fingers, folks. We just need to be a team here. That's why I want to do this. So you might not have joined me today. If you're a loan officer, you're probably pretty darn busy. Hopefully, if you're a realtor, actually, we got like 3 contracts in yesterday. I think it was like, that was odd for this time of year, but thank you guys for watching us and checking us out. But that's basically most of the pieces of the puzzle that I wanted to go over with today. So I wanted the breakdown of this was this. I wanted to go over rates and values, where they're going. Sorry if I just squeaked in the background. Now, for those homeowners out there, we're going to talk now homeowners, and then we're going to go on to home buyers. So what are we advising our homeowners right now? Are we tracking all of our clients that we closed last year? If you're a borrower on here and your loan officer is not reaching out to you, and you see rates, rates are, in the 6s and you're even in the 7s, reach out to me. Here, I'll show you. Go over to the rate update right through here, top right through here, hit RateWatch, plug in your information, or just ask Dan a question. Say, hey, Dan, my rate's at 7. What can you do for me? We'll be in touch, and I'll let you know what's going on. So if you're a loan officer, get a hold of your people that you closed. That's where you even come into these things. You go into these charts and look at it. Who did you close? When these MBSs are way down here, all right, rates go down, or bond prices go down, rates go up. Remember? So go down here. Anybody you close in January this year, that's basically the highest the rates were all year. And it's been when they go up, rates are coming down. Okay. So that's what we're doing for homeowners. Check out, see what the rates are. Here's what you might not understand, that the cost of refinancing isn't that bad. So check it out. Send me your mortgage statement. I can do an analysis for you, get back with you, and it'll be a video form. We'll break down what your new payment's going to be, your costs, how long it's going to take you to recover your costs, a whole bunch of things. So make it so it's not confusing to you. And we provide you all the information. So that's what you guys should be doing for your clients. So that's homeowners. Look for that. Look and make sure that even in a refinance, you might be able to kill 2-3 birds with one stone right now. Think of it. If you're a homeowner right now, you're sitting there and it's like, it's the holiday season. I'm struggling. I have a ton of equity in my house. Maybe an interest rate reduction could help me a little bit. Wonder if your home increased enough in price, you can get rid of that, what they call PMI. The average PMI is probably about $230. So if you can refinance, just get the equity out of, bring down your loan to value, what they call it, you might be able to just reduce your PMI. That could save you $200 a month. And if you close in the last year, I know you're going to get a lower rate. So between those two things might be a good time of year to do it. And you're also going to skip at least one mortgage payment. So that might be another benefit for you out there. Now, if you're looking to buy in the spring, if you're looking to build, what do you do? Okay, so all the projections that I'm coming up with, all the data I'm coming up with is saying there's no really reason for mortgage rates to really drop a ton. And you might say, yeah, there are, but historically, these are pretty darn good rates. Could rates get in the 5s, high 5s? They could. Okay, so I'm going to say they're 5.99 is where we might be in the next year. So project out when you're looking to do this. Make sure that you qualify at a higher rate, maybe 0.5% higher. Why? Don't be like the people in 2020 or 2021 when the housing prices were going crazy. Everybody had to buy. They put in the contract. It wasn't going to be built for a year. They're okay with that. They're qualified at 3.5%. And then when the time come to close on that house, rates were 7.5%, and that payment was $1,000 more than they thought it was going to be. So don't be that person. There isn't really any reason for rates to skyrocket. But when you qualify, even if you're a realtor or your loan officer, qualify your clients maybe 1/4 or 3/8 higher on the rate than what you can get today, and explain to them, here's why we're doing it. I want to make sure that you qualify even if rates take a jump. They're like, I wouldn't buy the house. Well, I'm at least give you that option, but I'm going to show you here, at least you can still qualify if you want to. So that's that piece of it. If you're closing, building the house and it's not going to be ready for next year, there's going to be a whole new Fed. a whole new Fed. Okay, so the Federal Reserve is going to continue to cut. But what we need to do is monitor what's going on with inflation, what's going on with the jobs market, what's going on with the tariffs, and what's going on with our national debt. Those will be the factors in this. Get rid of all the other smoke screens behind you. Those are the things that are going to control the markets. Subscribe. Even if you're a loan officer, a realtor, subscribe. I'm not your competition. I'm here. Check it out. Check out my videos every day. Use the data that I provide to help make you a little bit better of a loan officer, a little bit better of a realtor. And maybe kind of like why I got into this. And again, I hope I wish I could have found all those crash videos. When hopefully when somebody asks you, why do you do this? Hopefully your answer is kind of like mine. I just want to make a difference. And I truly do. So if you're a realtor out there, reach out to us. We'd love to at least advise you on all the programs that are out there available to your clients. We talked with a builder representative at DR Horton yesterday, and it was funny. He talked with one of my sales guys, and the guy, my sales guy came back and said, he's like amazed with all the stuff that we can offer. He can't even fathom it. So make sure, everybody knows what you do, all the products you have to offer. We will be coming out with a calculator actually as well that my son created, and it's the eligibility calculator, and it's cool. You plug in all the details of your client. I didn't even know half these programs existed. So I was like, where'd you get this data? And he's like, dude, these are all our lenders. I'm like, you done good. So we're going to come out with a calculator for loan officers out there and realtors for loan eligibility. We're going to come out with I don't want to say this. I hate the max purchase price calculator. I'm going to say the affordability calculator where you can kind of manipulate it, but it's going to be really detailed because you want to make sure your client is getting what we promised them. And that's the whole goal here. We don't want to shock them. We want the transaction. It's already hard enough to, you have a new home buyer and they're already scared enough. Put yourself in their shoes. Would you buy in this market? It's kind of scary. House prices, they're up there. Real estate taxes, especially in my area, they're crazy. Insurance. Have your clients check and get an insurance quote just so they know what their total payment's going to be. Don't care about that next sale. It'll come. Make sure you take care of that client. And then, hopefully they refer you to somebody else, but at least you done it and you made a difference. And that's all I want you to do. So that's my report for today, folks. If you know anybody that this might be able to help, loan officers, teams, realtors, please share it. Hopefully they don't click out to me to use me for their mortgages. But if you're a homeowner out there and you need some help, we'd love to help. If you're a realtor out there and you want to partner with us, because I'm licensed in all 50 states as well as Puerto Rico, for folks. So let me give you a little bit of tidbits about me. Yes, I am Dan Frio, the host of the Rate Update. I'm also a mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. My slogan is this. It's kind of cool. I created this myself. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. Now, here's why I do what I do. I was at the company for 17 years. I was a vice president, ran a huge piece of the company, and that was the subprime days. And basically, the mortgage business just crumbled. So I went out and started my own brokerage, did that for years. And then I was like, you know what? I'm getting a lot of views all over the country. So how can I become a licensed mortgage loan officer everywhere in the country? So what I did is I joined the bank. And the bank provides me a federal license. But here's the cool thing. Here's the thing about our slogan is when you're calling around, it's kind of like the short I did. And I'll try to find it, post it up here, post it down there. If you're a consumer, it's crazy. Because you go in there and you type in, what's the lowest mortgage rate in there? And all this shit comes up, and 99% of it is just marketing. Please don't be wowed by the marketing. That rate is the best rate that company can possibly even get you. Make sure you do your due diligence. That's why I've been doing this for 35 years. Check out my videos. Check out my Google reviews. Just Google my name. Hopefully you get a little more understanding of what I do and how I do things. Love to work with you. If you're out there looking to buy or build, I'd love to partner with you. If you're a realtor, if you're a loan officer and you're just like, man, I'd like to have a license in all 50 states. If you're a team, reach out to me at the beginning of the year. I think the bank might be opening up right now. They're not looking for any more positions, but I think at the beginning of the year, they'll be looking to bring on maybe some teams, and it's a great atmosphere. And if you want to learn a little bit more about that, reach out to me. Love to talk about that as well. So if you're a consumer out there at the last minute needing some money, we have a 5-day HELOC. And I don't know if you knew that. Okay, so what's down through here? All you need to do is click this button down here at the bottom. You'll review the rates, put in your information within 5 business days. We'll get back with you. And we'll get back with you way before that. You may be able to have $400,000 up to $400,000 in your pocket. So check out the 5-day hassle-less. It's basically just computer-based. You put in your data, you might get 1 or 2 emails from us, and that's it. The rest of the ball's in your lap. So check out that. And just as that is it for today's view. I hope you liked today's show. If you did, please give me a thumbs up and subscribe down there if you haven't done before. So thanks for watching, folks. Let me know if you want me to continue this each week. If you're a realtor or loan officer interested in this, please let me know. Reach out to us. Give us a thumbs up, or maybe I'll do a little survey. Because if this is something what's wanted and needed, be more than happy to spread the knowledge. So thanks for watching. Can't wait to see you here next week. But I'll be back at the closing bell.